Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, three charts, three trades. Rick Ducat will take us through the charts. And here to take us through the trades, we've got the one and only Dan Deming, managing partner at KKM Financial. It's great to see both of you. Dan, I haven't talked to you in a while.
Yeah.
All right, let's start out with your first pick on your list. You've got CASY's in your sights. They hit an all-time high yesterday. What's your view here?
Well, that's the view. I mean, CASY's flies under the radar, but when you're looking for stability during volatile times, consumer staples certainly have shown the fact that they are weathering the storm much better than some of the other sectors in the market, and CASY's is right in the middle of that sector, and has been really a star in this sector for many years, and just I think, appreciated for the ability to maintain margins, maintain the profitability, expand, but not overexpand. And you're seeing the results of that continue to flow through in the stock price. And so that's why I'm highlighting this in the trade example today, because general strength, and also the one theme in the trade examples today are defensive in nature. So that's why I chose these three names.
Okay. All right. Rick, why don't you take us through what you're seeing when it comes to the chart for CASY's?
For a defensive name, it's done pretty darn well. We're up 49, 50% off of those lows that we experienced almost a year ago here. And for the most part, we had this large gap up here on earnings all the way back in June of last year here. From there, sideways price action for a while, but exhibiting this kind of gradual stair-step type of price activity here, where we see increasingly higher lows being formed here for much of the trajectory. We did have a bit of a breakdown here, but what I noticed is that we stopped cold at the 252-day exponential moving average in purple here. Then we saw a very sharp rally. I mean, look at all these green candles in a row here. And then we had our tariff news. This is kind of this area right here. We pulled back. We formed a trend line here, not the greatest trend line in terms of matching up, just kind of a general trajectory for the way price is going to give us this channel type shape here. Now we are near the top. We hit those highs yesterday and just kind of holding position for right now. We can see RSI did form a small amount of bearish divergence here where price made a new closing high, but RSI did not follow suit here. So be on the lookout for price to break through that trend line for signs of further bullish momentum increases here. Now, if we were to look at our other studies here, well, not really much notable in terms of heavy volume until all the way back down here near about 420 or so, which matches up pretty closely with our orange 63-day exponential moving average and our old trend line. So that could be a downside area to take note of here, but also 440. Old highs. That was about where we topped out previously before we had our push to the upside. Plus one standard deviation channel also comes in near 470.52. Could be an area to watch for potential consolidation.
Okay, and Dan, so how do you approach your trade on this one?
Yeah, so looking at this, Diane, I think, ownership of the stock, I think based on just the general trends that Rick pointed out, I think is something that, I think is worthy considering moving forward, particularly given the fact that what the market has experienced and the strength that CASY's exhibited. So I'm looking at a buy right today. Excuse me. Sorry about that. And
that's all right.
So basically buying the stock and then selling a June 500 call to, again, have an exit point, which is about 11% above the market right now, collect some premium, and still have the ability to participate with further upside. And if the stock does stall out here, possibly move a little lower over the next couple of months, this lowers your break even. And so that's really the thought process here is get long the stock and then write a covered call above it. And if we see a significant move the next couple of months, then you have the opportunity to reconsider if you want to maybe take the position off or, roll that call out even further, depending on how the price action unfolds.
All right. And Dan, next up on your list, you've got Dollar General on your list. I'm wondering if I see a theme happening right here, but tell us your view on this one.
There you go. Yes, another interesting name, certainly in years past has shown the ability to weather significant, volatility in the markets. Now, last September, it experienced significant selling pressure. on the idea that, I mean, the tariffs, the threat of tariffs even back then, or with its exposure to China and also the earnings announcements really weighed on the stock. But to me now, it looks like it's stabilized. It's trying to find its way back out of here. I think that it could potentially fill that gap that it experienced. And this is a name where I think there's an opportunity here from a trade example standpoint to put on a risk reversal. We're selling a put, buying a call to capture further upside. And if the stock does drift back down here the next month or so, then you have the ability to get long the stock.
Okay, and then Rick, what does the chart tell you when you look at Dollar General? This year so far has been a very different year than last year. I know that.
Yeah, this one is interesting to me because there's two very distinct phases in this chart here. It's pretty easy to see where the change happened. It was this earnings event here where price fell by about 1/3 in one day there. So a very rapid turn of fortunes here for this name. From there, though, it's kind of an interesting setup. It looks to me like we have kind of a cup and handle type pattern forming here where we have this long, gradual bottoming out and then slowly recovering here. We have touched on the 97 level, which is our post gap up high point here. Then we pulled back to a supportive level, 85, this green line here, a series of old highs several times. That also matches up with our yellow 21-day exponential moving average. So we've got our shape of our cup and handle here, like a coffee cup, and there's the handle. And then the thinking is that it would break above that old resistance and continue on to an uptrend here. Not saying that's going to happen. I'm just saying that's what people look for when they're trying to trade a pattern like this, and that's how the hope that it would play out would be. If that were to happen, our upward, we have our serious resistance level here to overcome, our old highs, and our purple 252-day exponential moving average near 97. RSI holding up decently, though, still above the 50 midline, still trending upward here. If we were to look at our other studies, standard deviation channels and volume profile, we can see the volume profile. The area of heaviest trading is below us near about 81. There was a high volume of activity at these low levels here. And when we look at our 5-year chart, I included a 5-year chart because I wanted to emphasize this point. Look at how much trading there is on a 5-year basis versus how little time we spent here. A lot of traders typically would say that the heavy trading at these low levels would be suggestive of some type of bottom for at least the short term.
Okay, and then Dan, let me send it back to you for, again, your approach on this trade.
Yeah, so in this situation, Diane, I'm looking at a risk reversal trade example today, and that's selling the June 85 call and buying the June 95 call. You can do that for about $1.20. It does. So there is a slight cost to this, but the idea here is to have the opportunity to participate if we do break above 97, which Rick pointed out. And if we do see some weakness, then have the opportunity to get put in the stock, about 4% lower than where it's currently trading, down in that range where I think that there's a bottoming and some support level down around that 85 level. So, again, have the opportunity to participate to the upside. But if we do see some weakness over the next couple of months, then you have the opportunity as well to pick up the stock at a better level.
Okay, and then the last one on your list, another stock that's been hitting an all-time high, Phillip Morris. Tell us the details on your views on this one.
Well, this one is, again, strength into weakness, defensive in nature. Dividend juggernaut has always been known as that and will continue to be that, I think. And that's really the themes here as, Phillip Morris is viewed as a defensive name with kicks out a nice dividend. And so that's really the focus here today as to why I chose this as a trade example.
Okay, and then Rick, take us through the technicals for Phillip Morris.
I got to say, a little disappointed we didn't go with General Mills. We could have had 3 Staples names that all had General in the name here. But I understand Phillip Morris is a really good chart here. And kind of like our last one, we had 2 distinct phases. We had this big jump to the upside on earnings, much more recently, though. But from there, just kind of grinding higher and higher within this upward sloping channel here, hitting those highs today here. So we are coming near the top of that channel here. Not saying it's going to stop or anything, just because something is high doesn't mean it can't go higher. This could be one area to look for potential consolidation or slowdown, though, after a sharp rally during the past couple weeks here. But I also notice here RSI was trending down as price was going upwards, so we did have the divergence. But it looks like the RSI is starting to be broken here. So if price continues to show strength and RSI breaks above that trend line, I mean, it could be another leg up in that stair step type of price activity that we talked about earlier, excuse me. So we can see now here, volume node comes in around 153, lines up with our linear regression line, also rather close to the 21-day EMA, that's a bit above. But like 153 to 155, those could be supportive areas. If we do keep rallying there, we could see the +1 channel coming in near 171. And just a quick look at our 5-year chart, really remarkable during the past year and a half or so, just a very, very sharp rally in this name.
Okay, and Dan, we're going to cede the floor back to you for your trade here for Phillip Morris.
Yeah, so Phillip Morris, again, this is the idea here is to be put in a position to collect that dividend while the market still continues to sort things out, and again, defensive in nature. So really, buy writing this name would be the trade example today. So buying the stock and then selling the June 180 call for about $1.55. You get to collect about 1% versus the stock over the next couple of months. Plus, you get to collect the dividend, and you have the opportunity to participate in the stock. It's up about 11% to that 180 strike. So, again, defensive in nature, dividend payer, and the idea is that